Welcome back to 4 Wheel Finance. In this video, I'll be breaking down how much you need to make in order to afford a 2022 Ford Maverick. I think you should really consider following one of these rules in order to avoid making a huge car buying mistake. Cars go down in value very quickly, the majority of them, and a bad decision will set you back for years down the road. I've also included a link to a free auto quote where you could save up to $600 a year. Takes 20 or 30 seconds, completely free, and that's in the description down below, but more on that later. There are 4 options I'll be going over today. You can decide on which one suits you the best depending on how into cars you are. Some don't really care too much, want a vehicle that'll take them from A to B, reliable transportation, and some are willing to sacrifice quite a lot more in order to get the car they want, like car people. Stick around to the end of the video, find out which method would be best for your personal situation. I've included my own personal rule in there, and that's more geared to the real car person or truck person. This is 4 Wheel Finance, a channel dedicated to helping you making smart car buying decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make, so please give it a like, subscribe, comment down below what other vehicles you would like to see, or any thoughts on some of these numbers. First rule I'll go into here is the 24-10 rule, pretty popular, you might have heard of it before. This states you need to put at least 20% down on the vehicle, you can't finance it for more than 4 years or 48 months, and the payment can't be more than 10% of your monthly gross income. Since the 2022 Ford Maverick has an MSRP of about $20 grand, you would need to put down $4,000. And with an average new vehicle interest rate of 3.86% and a 48-month term, this would bring your monthly payment to $360.23, which is really not too bad. This is quite a deal for a nice new vehicle. Note that you're also paying about $1,300 in interest here. Bank Rate states the average monthly insurance cost is about $150, but this varies a ton from person to person, so use that smart financial link in the description down below. It gives you an exact idea on how much it would cost for you to insure a 2022 Ford Maverick or any other vehicle for that matter. This brings your monthly total to $508.23. Now back to that 24-10 rule. Given your monthly cost is $508, you would need a monthly gross income of $5,082. or an annual gross income of $60,987.60. I encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car or $5,000 car in cash and put what would be your car payment of $360 in the market instead, over the course of 5 years with a conservative 6% rate of return, this would turn into about $25,152.70, gaining over $2,500 in interest alone. And that's just for the first 5 years. If you were to continue that for 10 years, it'd be $58,812.70. Again, only at that 6% rate of return. And for reference, the stock market averages about 10% return per year historically, so that 6% is pretty conservative. But I've got to admit here, like 20 grand, if you can get it for 20 or 25 grand for a Ford Maverick, I won't be too upset with you. That's a pretty dang good deal. Probably one of the best deals for new vehicles on the market right now. The next rule is the Dave Ramsey rule. This states you must have a 3 to 6 month emergency fund built up. The vehicle can't be more than 50% of your annual gross income, and you need to purchase it in cash. Given the 2022 Ford Maverick starts at 20 grand, your annual gross income would need to be a minimum of $40,000. So not too bad. Ideally, it's nice to purchase a vehicle in cash, and you would avoid having to pay that $1,300 in interest, and your insurance would be a little bit lower. But not everyone has 20 grand in cash that they could put towards a vehicle. I mean, it's a lot easier in this case. 20 grand for a brand new vehicle, or even 25, is not insane. If you'd seen some of the other videos I've covered so far, we're closer to 60 to 70 grand. So having 25 for a brand new vehicle is a pretty sweet deal. Those first 2 rules are a little tricky to achieve. You would assume that the average person wouldn't be able to follow them, which is why I've come up with my own. For my rule, you need to have at least a 6-month emergency fund. Invest 15% of your monthly gross income into your 401k, and ideally max out your Roth IRA and your HSA if you're really a superstar here. And I know this might seem like a lot of saving, but I don't give you that monthly percent rule spending-wise that you have to stick to. So it's up to you to decide how much of your money you want to spend on a vehicle or car parts, or if you want to go on vacation, if you want to go out to eat, if you want to have another kid or something like that. And the 6-month emergency fund just ensures you're covered in the case that anything bizarre or wild happens, or an emergency, obviously. And the investment portion gives you a little bit of financial security later in life when you'll need it the most. You may not think that the way that your life is set up, you're going to need that, but it's nice to have it and not need it than need it and not have it. And the majority of people say, well, nothing's guaranteed. And that is 100% true. Nothing's guaranteed. But it's very difficult to put a value on having peace of mind for yourself or your family's future. So I definitely encourage you to start investing, even if it's a small amount. I've got a link to M1 Finance and Acorns Investing down below. They're very easy. You can start literally with cents. So I encourage you to take a look at those and get on the wagon with it. The final rule is the 1/10 rule, which was developed by Financial Samurai. Very popular blog. You've probably heard of it before. And personally, I think a lot of people should follow this. It's a very basic car buying rule that doesn't really allow you to have a super nice car, but it allows you to spend responsibly, which reduces your financial car owner stress, and it increases your net worth over time because you've got a lot more free money to put into things that go up in value. It's very straightforward. States you shouldn't spend more than 10% of your gross annual income on a car. It needs to be new or old, but obviously it's going to be old for almost everybody. And you must own it for at least 5 years, but ideally more. And the theory here, again, minimize your financial stress, frees up a bit of money to invest in assets or opportunities that may come your way, stuff that goes up in value instead of cars. Almost every single car goes down in value for the majority of history. I know these past few years have been way different, but typically cars always go down in value. It's a lot more stressful making life decisions when you're worried about those car payments and maintenance bills and whatnot. Whether to move, whether to take a new job, it's a lot easier when you've got a little cash flow coming in. Once again, this is 4-Wheel Finance. If you've got any questions regarding car buying or how much of a car you can afford, please leave them in the description below. And any other vehicles that you would like to see. Again, I've got that free auto quote. You can save up to $600 a year, 20-30 seconds, totally free. Give that a look if you're interested in saving a bit of money on insurance.